Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about Fed Chairman Powell's comments in Congress this morning, the recent move higher in Bitcoin, and the concept of bond duration, or how to lock in longer interest rates for higher on your CDs. Before we begin, as a reminder, this is a financial education presentation, should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Chairman Powell testified in Congress this morning. What did he say, and how will that affect the markets?
Well, hey, good morning, everybody, and thank you, Allison. Overall, the markets, as you can see, are in the red. They've been in the red all morning, even before Chairman Powell started talking. So I think overall, the market, kind of got in a little bit of a sugar high mode, is what I call it, from the big run up in tech. And now it's taking a little bit of a breather. I call that reversion to the mean. I'm not worried about it. Certainly, Chairman Powell's testimony today, it was front and center there on the screen, but as I scroll up here, you can see the big takeaway as he expects, and he was a little more consistent in his message this morning than he was on after the rate pause last week. We did a press conference. It was kind of all over the map. But overall, he's saying, hey, the inflation fight is going to take longer than expected and expect more rate hikes ahead. Do I believe what he's saying? I think what he's saying, is ultimately, I don't think the Fed knows how things are going to play out, right? Inflation could fade pretty hard, and this is the final pause, and everything is going to be good to go. I'm more along the lines of that camp, that inflation is going to continue to fade, and that we won't need more rate hikes. However, he's hedging his bets, saying, well, if inflation is stickier, then we're going to have to raise more rates. And, the argument to that is, well, if you think that, why wouldn't you just go ahead and raise rates now? So that's why I think even though they're saying they're going to raise rates, I think in their heart they don't want to, because I don't think they would have paused now if they thought they would turn around and have to restart back up. Overall, we don't know what's going to happen with rates, but I do think conceptually, even if they raise rates, it's only going to be another, 0.25% or so going forward. So they might have to but it won't be the same, 10 rate hikes in a row that we saw through all of 2022. Of course, each rate hike's a little bit of a left jab to the nose, right, for the market. You just one of those, the market sells off a little bit, but I don't think it's going to drive a huge sell-off going into the end of 2023, even if they raise rates.
Next, Bitcoin has moved up over 10% in the past 2 days. What is so attractive about Bitcoin right now?
Well, I talked about it yesterday, and I made the comment. I'm like, you have an entry point here all the way up to 30,000, but I find it attractive, and I said I need to think more. Well, I've been thinking more in the past 24 hours. I officially made the decision today to move into, a Bitcoin proxy. To go directly into Bitcoin, you have to have a coin wallet and do it that way. There are proxies in the market, and we're using one to invest in, not only personally, but into the client portfolios as well. So if you are aggressive or highly aggressive, and you're with us, you can expect to see that show up in your portfolio today. The ticker is MSTR. It's MicroStrategy. It's a software services firm that also has loaded up their CEO, Michael Saylor, has loaded up the balance sheet with Bitcoin. So it's a Bitcoin proxy, if you will. The other option is to use the GBTC, which is the Grayscale Trust. I don't trust that nearly as much, no pun intended there, but I think MicroStrategy is a pure play. But what's driving it higher? Well, take a look at the three points here. Yes, the price is moving up. Investors are growing bullish, largely because, it's just one of many reasons. BlackRock submitted an application for a Bitcoin ETF. Obviously, I talked a little bit about the legislation where the SEC is going after Binance and Coinbase. I think those are going to turn out to be frivolous, if you will. BlackRock, even though they know their Bitcoin ETF isn't going to be approved, they are basically, by filing for it, they're adding more pressure that here you have one of the largest institutions saying this is the right thing to do. So by filing for it. Why is Bitcoin attractive here? Ultimately, in the short term, it's attractive because the SEC is taking a harder line stance and people are taking sides, right? So one of two things is going to happen. The SEC is going to win and cause a lot of pain in the crypto space, which further validates the government is bad, and that we need to invest more into Bitcoin because we can't trust the government, right? And then you have the other side of the SEC relents, if you will, and it starts allowing these ETFs, which means the government is now supporting it. Either of those cases lead to Bitcoin going higher. So, Josh Brown and Rick Edelman, we heard them both in person last week at the conference. They were both kind of saying the same thing. They are what is called a Bitcoin maximalist, which I had not heard that term until last week. But now that I've digested it and thought about it, I'm officially in that camp. And a Bitcoin maximalist means that you believe in crypto and the blockchain technology behind it, but only with Bitcoin. And there's super risk in everything else. When Ethereum, Ripple, and on down the chain for what I call the altcoins, if you will. There's other names for them. But really it's like if you stick to Bitcoin, there are other things to find it attractive. There's a finite number of them. The 21 million, they're all going to be mined by 2040. There are a million reasons to kind of go in. But the really big issue is the legislation argument right now. It has to have some resolution in the next probably 3 months or so. So now would be the time to get in. And then secondly, with the election and all the spending that the government's doing with really no remorse, is you might want to diversify away from the dollar. If you want to diversify away from a fiat currency into another one, you have to find a country better than the United States. Tough to make that argument that any of them are. However, you could make an argument and go into some other currency, or Bitcoin does allow a currency there that's not tied to any government, that supposedly can't be manipulated. I buy that. I'm getting a lot smarter on the technology behind it. But a lot of those things are attractive. So what I say, if you're high risk, it needs to be in your portfolio up to 5%. We're not putting anybody over the 5% mark unless you call me, and then we can talk about it, why you want more. Like I was telling Jaden earlier today, is my stance on it is if you believe, you should probably have more than 5%. If you don't believe, you should still have up to 5%, somewhere from 0 to 5. Just to have exposure to it. I think it does have the ability to go not only higher, but significantly higher for myriad reasons out there. Here's the Bitcoin, up 7% today. I mentioned yesterday, you have a chance to get in before it gets to 30,000. Well, cough, cough, in 24 hours and change, it's at 30,000 from down here at 27 or so, 2,000 a coin today. Well, there's 30,000 even. Thank you for showing me that exactly. I like it. But we're still buying here, right? Jaden's executing the trades as we speak. So, you go to a 5-year, it was up at 60,000. People were calling in 2021 for it to go up to 100,000. People are laughing at that, thinking that's not possible. It is. It's not only possible for it to go to 100,000, I do believe it can go to 1 million. Now, I'm not saying tomorrow, but we're buying this, the MSTR as a proxy, and this is a buy and hold philosophy. You're going to hold through the pain. So expect to stay in it. We had to bail. We were in it in 2021, somewhere in here. We had to bail and going into 2022 when we had to go risk off. But overall, I think it's a good place to be long term. So that's why it's in your portfolio. If you have any questions, go ahead and reach out.
Last, you've recently said that you want to lock in interest rates for longer. What does that mean?
Okay, lock in for longer. So, and Joel, one of our advisors, wrote a good piece on this morning saying, hey, with volatility up, a lot of ways to play that is to go short term and use treasuries, right? And you've seen us do that. And some folks are like, I have money in the bank. Should I go right into the market? It's like, hey, let's put it into a CD right now. Lock in that 6 months or a year out to above 5%. And lock it in for now, and then we'll reassess later as to where we are. Maybe we get a better entry point on equities later. We'll see. But the concept of what you can lock in is this is the short term. If you look right here around this dot, that's the 3 month. So really 5.4%. If you go out here, if you go, okay, a 3 month CD, boom, lock it, or treasury, but I like to use CDs because they're a little easier for people to understand. We can lock it in at 5.4 basically. If we go to 4 months, we could lock in the same rate. And then we go to 6 months, we get a little bit higher. So why would you lock in at 3 versus 6? Well, if you lock in at 3, that means you have another option in 3 months, which means if the Fed raises rates within those 3 months, then you would have the option to maybe buy at a 5.51 then. If you lock in for 6 months and the Fed raises at the 3-month point, then you have locked in at a lower rate than you could have had. So that's what you're looking at for the math behind it. Now, what I'm trying to do is look out to the 1-year point or even the 2-year point. You can see from the yield curve, 2-year point falls below 5. The 1-year point's still at 5.2. So I'm trying to go out a year and a half, and I want 5%. So when folks are saying like, hey, Steve, 10K is coming into the account, I want it safe though, what can you get me? I'm like, I can get you 5% for 18 months. Okay, and that's what the yield curve is giving. And you can see if you go out past that, you're going to lock in a lower rate. So there's a trade-off there. All of this is called bond duration and CD duration, meaning the higher the duration, the more sensitive it is to interest rates. Well, we don't know if they're going to go up anymore, but in the future, we do pretty much know that they're going to go down. Right? At some point, we're going to start lowering rates. So that's a trade-off. And I won't talk about this too much, but you could literally talk for hours on bond duration and still not fully understand it. So because there's things like this math equation. And if you don't like the Macaulay version of duration, you can go down here and do a duration versus weighted average life. And then you get all this math. So have fun with the math. But the big issue is, how far out do you want to be on the yield curve? We had been, when interest rates are rising, you want to stay short because you're going to have better CDs and bonds coming out soon. If you are thinking it's going to drop, you want to drive that duration out longer on that yield curve to lock in, up here in 5% or so before the expected drop comes. So that's what we're doing with CDs and bonds to a certain extent. If you hear us talking about locking in the higher rate for longer, we're doing what we can to be able to do so. So if you have any questions, again, it's a really difficult concept to kind of get your brain around, but we'd love to have that conversation if you're interested.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.